Welcome to our CFP exam prep discussion on insurance professionals, specifically focusing on the critical distinction between insurance agents and brokers. Understanding this difference is crucial for the CFP exam and your future practice. Let's break down the fundamental concept. Insurance agents work directly for insurance companies and represent their interests. Think of them as the insurance company's sales force. They have the authority to bind coverage and issue policies on behalf of the insurers they represent. An agent can either be captive, working exclusively for one insurance company, like a State Farm agent, or independent, representing multiple insurance companies. On the other hand, insurance brokers represent the policyholders' interests. They work independently from insurance companies and shop around different carriers to find the best coverage options for their clients. Brokers don't have the authority to bind coverage directly. Instead, they must place coverage through an insurance company or its agents. Here's a practical example that often appears in exam questions. Let's say a business owner needs comprehensive liability coverage. An insurance agent would show options available from their specific insurance company or companies they represent. A broker would analyze the business's needs, then shop around multiple insurance carriers to find the best coverage and price combination, potentially even negotiating terms on behalf of the business owner. When studying for the CFP exam, students often make several common mistakes regarding this topic. The first mistake is confusing the binding authority. Remember, agents can bind coverage while brokers cannot. Another frequent error is assuming all insurance professionals have the same fiduciary responsibilities. Brokers generally have a higher fiduciary duty to their clients since they represent the policyholders' interests. The compensation structure is another area where test takers get confused. Agents typically receive commissions directly from insurance companies. Brokers might receive commissions from insurers, but may also charge separate fees to their clients for their services. The exam might present scenarios where you need to identify potential conflicts of interest based on these compensation arrangements. A deeper aspect that's worth noting is the impact on policy negotiations. Agents are limited to the products and terms offered by their insurance companies. Their negotiating power typically extends only to what their companies allow. Brokers have more flexibility in negotiations because they can leverage multiple carriers against each other to secure better terms for their clients. Here's a key point that often appears in exam questions. When an error occurs in policy issuance, the liability implications differ between agents and brokers. Since agents represent the insurer, their errors are generally attributed to the insurance company. However, brokers' errors are their own responsibility, which is why they carry separate errors and omissions insurance. To solidify this concept, think about buying a car. An insurance agent is like a dealership representative who can sell you cars from specific manufacturers. A broker is more like an independent car consultant who helps you evaluate all available options across different dealerships and negotiates on your behalf. Remember, the CFP exam loves to test these distinctions in practical scenarios. Pay special attention to questions that involve determining who bears responsibility in various situations or identifying whose interests are being represented in specific insurance transactions. Understanding these fundamental differences will help you navigate these questions successfully and serve your future clients better.